Hello and welcome to the House Lux Estate channel, your go-to place for everything real estate. We are here to enlighten and engage you with reliable and relevant information, serving as your compass in the vast landscape of property investment. Whether you're a seasoned investor or just dipping your toes into the world of real estate, this channel is designed to help you navigate the complexities and unravel the opportunities that lie within. Our mission is to empower you with knowledge to break down complex concepts into simple, digestible insights. We cover a broad spectrum from market trends and property evaluations to investment strategies and legalities. We pride ourselves on being a trusted resource, a virtual mentor guiding you through your real estate journey. Today, we delve into an interesting topic. Is real estate a good investment? Join us as we unravel the pros and cons, providing a comprehensive understanding that will equip you to make informed decisions in your investment journey. Real estate investment comes with numerous benefits that can be enticing to many investors. Let's delve into what makes this avenue of investment so attractive and why it's worth considering. First off, a key advantage of real estate investment is the potential for a stable income. This is particularly true for rental properties, where consistent monthly rental income can provide a steady cash flow. Think about it this way. If you own a property in a high-demand area, you'll likely have a consistent stream of tenants ensuring an ongoing income. This stable income can be significantly higher than what you might receive from other types of investments. Next on the list is tax benefits. Real estate investors can often take advantage of numerous tax breaks and deductions, which can save them money at tax time. These benefits can include deductions on mortgage interest, property taxes, operating expenses, depreciation, and even certain travel expenses associated with the management of your property. It's like a gift that keeps on giving. Diversification potential is another major perk of real estate investment. It's a well-established principle that diversifying your investment portfolio can help manage risk. By adding real estate to your portfolio, you can spread your risk across different types of investments, potentially reducing the likelihood of a major financial loss. Real estate's correlation to other major asset classes is typically lower, meaning it can act as a buffer during times of economic downturn. Another exciting advantage is inflation hedging. The inflation hedging capability of real estate stems from the positive relationship between GDP growth and the demand for real estate. As economies expand, the demand for real estate drives rents higher. This, in turn, translates into higher capital values. Therefore, real estate tends to maintain the buying power of capital by passing some of the inflationary pressure onto tenants, and by incorporating some of the inflationary pressure in the form of capital appreciation. Moreover, real estate investment gives you control. Unlike other forms of investment, where your money may be tied up in stocks and bonds, with real estate, you have a tangible asset that you can improve, repurpose, or sell as you see fit. You call the shots, making decisions about property management, tenants, rental pricing, and more. It's a hands-on investment that can be as rewarding as it is challenging. Lastly, real estate can provide a sense of security. It's a physical asset, a piece of the earth that maintains intrinsic value. While market prices may fluctuate, the fact that your property is tangible offers a sense of stability that other investments may not provide. Plus, as you pay down your property, you build equity, a resource you can tap into in the future. Clearly, real estate investments can provide substantial rewards, but it's not all rosy. Let's explore the other side of the coin. Like any investment, real estate comes with its set of challenges and risks. Investing in real estate is not just about buying a property and watching its value grow over time. It can be a complex and demanding venture that requires a significant amount of time, effort, and money. Let's delve into some of the downsides of real estate investment. One of the major challenges in real estate investment is property management. Owning a property doesn't mean you can sit back and watch the rental income roll in. There are tasks like regular maintenance, handling tenant issues, and dealing with emergencies that could arise at any time. Whether you choose to manage the property yourself or hire a property management company, either way, it will cost you time, effort, or money. Another downside of real estate investment is the market fluctuations. Just like the stock market, the real estate market is also subject to ups and downs. Property values can decrease due to a variety of factors like economic downturns, neighborhood decline, or an oversupply of properties. While real estate is generally considered a safe investment over the long term, there can be periods of stagnation or even decline. So it's important to keep in mind that the value of your property may not always go up. The high entry cost is another barrier for many potential real estate investors. Buying a property involves a significant upfront investment. You need to consider the down payment, closing costs, and ongoing costs like property taxes, insurance, and maintenance. And let's not forget about the mortgage payments. All these can add up to a hefty sum, making it difficult for many to enter the real estate market. Liquidity, or rather the lack of it, is another challenge in real estate investment. Unlike stocks or bonds, which can be sold almost instantly, selling a property can take time. It's not always easy to sell a property quickly, especially if the market is slow or the property is not in a desirable location. And even when you do manage to sell, there are costs involved like agent commissions and potential capital gains tax. So, if you need cash quickly, real estate may not be the best investment for you. Lastly, let's talk about the risk of bad tenants. While having a rental property can provide a steady stream of income, it can also be a source of stress if you end up with problematic tenants. They could damage your property, fail to pay rent on time, or cause other issues that can lead to legal disputes. Dealing with bad tenants can be a time-consuming and costly affair. Despite these challenges, many people choose to invest in real estate because of the potential for high returns and the ability to leverage their investment. However, it's important to understand that real estate investment is not a get-rich-quick scheme. It requires careful planning, due diligence, and a long-term approach. As we can see, real estate investment is not without its pitfalls. It requires careful thought and strategy. So, is real estate a good investment? The answer is, it depends on your financial goals, risk tolerance, and investment strategy. As we've discussed, there are several advantages to investing in real estate. It can provide a steady income stream, potential tax benefits, and an opportunity to diversify your investment portfolio. However, it's also important to be aware of the downsides. Real estate requires significant capital, ongoing maintenance, and it's not as liquid as other forms of investment. Moreover, the profitability of real estate can be influenced by various factors such as market conditions, location, and property management. It's essential to do your research and possibly consult with a real estate professional before diving into this type of investment. Remember, every investment decision should be well-informed and well thought out. Thanks for watching. Don't forget to subscribe to HouseLux Estate for more real estate insights.